I'm just going to talk about whether you pay tax when you sell your house. So what I'm talking about here is not necessarily a second house, not being in a situation where you've already got multiple properties and you're selling one of those properties. I'm talking about selling your main residence or where you've lived, selling your home basically, and a few basic different circumstances surrounding that. So first of all, 95% of the time, if you've got a home and you've always lived there, you're not going to pay any tax when you sell your house. And that's because there's a relief available called Principal Private Residence Relief. It's always shortened to PPR, so if you hear people talk about PPR, this is what they're referring to. Essentially, if you sell your own home, where you live, and then you sell it and you're upgrading or downgrading or whatever you're doing, there's never any tax that's due on the sale of that house. Now this can get quite complicated when you've got multiple properties, or if you've got different couples and they might each own one of their houses, or you moved into a second house, for example, and you kept that first house. There's obviously endless different scenarios that you can get yourself into, but I will just cover the basics here. So first of all, if you've got one home, you've always lived there, no tax. So a slight variation on that then, what if you haven't always lived in that house, or you've rented it out and then now you've sold that house? So again, going back to the basics, I'm only talking about if you're ever selling a house here. So if you moved out of a house and started renting that, yes, the rents are taxable, but I'm only talking about any sort of profit or gain on disposal of actually selling that property. Okay, so I've just done a very basic example. This one here, so say for example in 2007, I've got 07 here, you bought a house for £100,000. 10 years later, in 2017, you sold it for £200,000. Okay, so you've effectively made £100,000 over a 10-year period. Okay, now in this period, what I've just said is you've lived in it for the first 5 years. Okay, so hopefully it's agreed that 5 years is half of the 10. So half of that is to do with half of that £100,000 gain is exempt because you lived in it in that period of time. Now in the second period, it was rented up until when it was sold. Okay, so there's a number of things, there's a number of situations where you can apply further relief to periods of time where you weren't actually living in the property. Okay, so the two main situations I've just listed underneath. We've got if you're absent from the property, we've got a separate section for lettings relief. So first of all, just talk about this absent period. If you were living in a house and you have to move away for whatever reason, and then you reoccupied that house afterwards. So we're only talking about situations where you are absent, but then you return to the house once you have finished doing whatever you're doing. So the first rule is you can have 3 years of deemed having lived in the house, deemed occupation it's called, for whatever reason you want. So say for example you lived in a house for these first 5 years here, then you moved out for 3 years for whatever, going holiday, travelling, and it wasn't rented or it was rented, it doesn't really matter, and then you moved back into that house for a couple of years, then you sold it. Because of this rule here, those 3 years that you're away, you're just treated as having lived in it. So in other words, you're treated as having that Principal Private Residence Relief in the period that you weren't in that house. So the second one, you can have 4 years worth of deemed occupation if you're away on work. Thirdly, you can have any period of time if you were employed abroad, for example. So if you were based overseas for a 5, 6, 7, 8 year period, doesn't really matter, and then came back to the house, that time in which you're away, again, you wouldn't pay tax on any gain or profit arising in that period of time that you're away from the house. So again, if in the situation here, if you bought the house for a 10-year period, you lived in it for, I don't know, a year or two, genuinely lived in it, then you were away for the rest of the period, then the last year you came back from your employment abroad, lived in the house, then sold it, so you've made your £100,000, but you weren't really living there most of the time, that's still fine. You can still claim this PPR relief because you qualify for one of these absent period rules. So the second relief that you can get is lettings relief, and this is slightly different. So it relates to if you're renting the house. So again, this is available if it has been your main residence at any point during the timeline. So for example, you could buy a house, have rented it, then move into the house. When you sell that house, you can get this lettings relief. Or in a situation here, lived in it for the first 5 years, then it's been let out. This lettings relief acts as again a further form of the PPR, which exempts that period of time where the house has gone up in value whilst it's been let out, but again you don't have to pay tax on that gain. So here then there's three criteria you need to look at. Lettings relief is effectively the lower of either £40,000, the gain in the let period. Okay, so that's looking at effectively what has the house risen by in terms of value in that let period. So you could look at a timeline event. So this is, say, rented for 5 years. It was £100,000 gain in the 10 years. So the gain in that let period was, say, £50,000 in this case, or the lower of whatever the PPR relief was. So in this case, we know the PPR relief is at least 5 years, i.e. £50,000 worth. So again, these are both going to be above the £40,000. So in this situation here, you would actually have lettings relief of £40,000. So what that means is you have £40,000 that's taken off of your tax computation when you're working out any tax that might be due. So I've just done an example here. So we've got, again, 10-year periods, £100,000 profit in that period. So this is where we're starting from. We've got £100,000 which is potentially chargeable to tax. Now half of that period, 5 out of the 10 years, is covered by your PPR because you're living there. So that's £50,000 we don't have to tax. The last 18 months or 1.5 years, that is never taxed if it has been your PPR at any point. So again, in this case, it was lived in, so you get that last 18-month period off of your tax. So again, time apportioning, 1.5 years out of the 10 equates to £15,000 worth of the gain. The lettings relief, as we already know, it's going to be this lower figure of £40,000 is our max we can claim. Now, because there's only £35,000 left, once we've taken off these two, the lettings relief claim is £35,000. So after all that, we end up with no tax that's due. There's endless anomalies when it comes to what is your home. Generally speaking, if for example you've got a very large house, again the whole lot is covered by PPR, as long as the garden, the land is generally speaking less than half a hectare. Or again, if it's larger than that, as long as you can prove that you needed all that land and all that building for your reasonable enjoyment, they call it, then again you can get that PPR relief. So if you lived on a huge estate where you've got multiple buildings, you might have I don't know, caretakers or something that live in separate buildings that were far away from the house, then that's a little bit more complicated. In theory, you might have some of the land is taxable, so you might sell the main house and the land and the buildings on the rest of the plot, and largely you wouldn't pay tax on the majority of it, but you might have, say, I don't know, 20% of that land that was you never really needed. It was just extra land that you had that you never used or never had enjoyment from. In theory, that might then be taxable. But again, it's working on the facts of the case, really. Other little things: how long do you have to have lived in the house for to get PPR, or principal permanent residence? I've had situations before where I've had people buy houses and then literally a few months later they've had to move away for whatever reason. They've got a new job somewhere else or whatever it is, and then they've rented the house out. Again, in this situation, you may still get the PPR. They look at the quality of occupation as opposed to any period of time. So you don't have to say live in the house for a year or a year and a half to qualify to get this PPR relief. And then obviously the knock-on effect is you also get lettings relief if you qualify for the PPR at any point in time. It's just looking at the quality. What were your intentions when you bought the house? If your intentions were genuinely to live there and you've got your household bills and all your other bills for mobile phone or whatever it might be being sent to that address, then yeah, that looks like you actually did genuinely want to live in that house. And even if then your circumstances changed a couple of months later, you would still get that PPR relief if that occupation for that short period of time was genuine. Just another little small point, when you're looking at this timeline of events, you can draw up your figures and apportion this on kind of any basis that you think is reasonable. You would only look at April 1982 onwards. So any dates before 1982 you just completely ignore for the purposes of creating this timeline. Any profit, if you ended up with any profit at the end of this, that would normally be chargeable to capital gains tax, which again I'll talk about in a separate video.